Alright, so as I was saying, we're doing activity 4.4 in your textbooks. Right. Okay. So yeah, this is the last exercise that we're doing together on Unit 4. I did 4.5 with the other group, so I'm going to upload that onto YouTube as well. So you're going to also have 4.5. So we've done 4.1, we've done 4.2, 4.3, 4.5, and 4.4 we'll have done, and we've also done 4.8 as well. Okay? So again, I'm just going to reiterate that at the end of the day, the work here is being able to do the adjustments, and then after doing the adjustments, it's about knowing how these adjustments have affected your financial statements. Okay? So it's not enough just to be able to do the adjustments. You need to know all your financial statements and your notes. Okay, very important, and your notes. Okay, right. But anyway, let's get into this. So 4.4, nothing new there. First thing they're asking us to do is journalize the adjustments. Then they are asking us to draft the statement of financial position, otherwise your balance sheet. Prepare the statement of profit and loss. Okay, no problem. Changes in equities, and then prepare all relevant notes to the financial statements. Cool. Right. So, first things first, we know all of this is for 28 February 2005. So, what you want to quickly do is get that timeline for your financial year. So this is 28 Feb. '05. That means that your financial year is beginning 1 March 04. Okay. Right, and it's so nice that we're actually having at least one session together with the adjustments face to face. So you guys can do all the work, and I can just type and complete that which needs to be done. So we have our pre-adjustment trial balance there, okay, for JPEG. All right, then it says additional information and adjustments. The owner, Mrs. J. Den, took trading inventory with a selling price of 1,600 for own use on 26 Feb 2005. The business trades at a constant markup of 33 1/3 on cost. The transaction has not yet been reported. Okay. So what must happen over here? Basically, we have drawings. Okay, drawings that has not yet been recorded yet. So obviously, drawings is going to decrease our trading inventory. Okay, so what you need to do here, now here can you see they're testing you on your prior knowledge. Okay, so before we can actually calculate how much, or should I say, in order to know how much our trading inventory is going to decrease by, we need to find out cost. Because remember, we do drawings based on cost, not on selling price. Not on selling price. Okay, so I was just quickly checking to see if they said ignore that. Okay, but they haven't said anything to that effect. So you need to draw your model, cost plus profit. Okay, can you guys see clearly? It's fine. Is equals to selling price. Okay, so we know cost, they say the markup is 33 1/3. So that's pretty much the same as saying 33 point reoccurring 3. Okay, you guys can figure out how many 3's you want to attach there. Okay, and here they said, what is this? They said markup on cost. So cost is obviously 100. So 100 less Okay, okay, so then obviously your selling price is 133 point. Okay, right. We've got that model there. Now we know that we have our selling price by what we want. Remember, it's what we want divided by what we have times what we want random amount. What we have random amount. What we have random amount. Okay, and that's how we're going to get what we want. So what we want is cost, which is 100. What we have, however, is selling price, which is 133.123. Okay, and then times what we have random amount, which is the 1,600 rands. So what is our cost, guys? What is our cost price on this trading inventory that was taken? How much? 1,200. Okay, everybody happy with that? Okay, now I just want to quickly check here if they actually were taking that into account here or not before we proceed. Okay, so they were actually ignoring that. Okay, which was what I was suspecting. Okay, but even if they wanted us to pay attention to that, oh, they actually say, note, ignore that above the required. Okay, I didn't see that. I looked for it, but I didn't find it. So now the question is, in order to incorporate this adjustment, what must happen? What are we debiting? What are we crediting?
We debiting, drawings, crediting, trading.
Do you guys agree? 100%. Okay. Thank you for that. Trading inventory is going to get credited because it's going down. 1,200. And then we're debiting drawings. Okay. Yes. In the question, they said took trading inventory with a selling price of. In the additional information, the first bullet point there, number 1.
So I've got like 680,000 minus 336.
Which activity are you on? What year is your book?
Check page 132. 132.
Okay. Right. Whilst he's figuring that bit out, let's just proceed a little bit. Okay. Let me get rid of these unnecessary columns.
No, so I just.
You're on the wrong exercise.
These are the answers.
You were.
These are the answers.
Oh,
What you doing right
I see.
now? I didn't know that was possible.
Wow.
I didn't know that was a thing. So much easier.
Does everyone know that you have answers in the back of your textbook? You've been knowing. Guys. Okay, guys, I actually want you to know that. And I'll tell you why. Accounting is not one of those subjects where you just practice blindly. You need to, and I don't want you even like going through half an exercise. Like go through a quarter of it, check, am I on the right track? You know, is what I'm doing making sense? Because otherwise you practice things that are, left. Okay. So, when you get through a quarter through, check, am I on track? Is everything balancing? Is it correct? And then proceed. But don't go and check the answer before you've actually tried. Because then you'll fool yourself, that looks easy. And then, yay. When the test comes, it's another story. Okay? Yeah. So let's proceed. Second adjustment, there says, according to a physical stock take, the following was on hand on 28 February 2005. Trading inventory, 42,400. Okay. If we look at trading inventory, then they're saying when we did a stock take, in other words, when we went into the storage, it was 42,400. But when we look at the pre-adjustment trial balance, how much do we have in trading inventory? We have 44,700. Can you see there's a discrepancy of how much we have in our books versus how much we actually have? So we need to fix that, okay? Our books must reflect what we actually have. So somebody tell me, what are we going to do about this? How do we rectify this problem?
So trading stock will be credited to the increase.
Yes. And
Stock deficit.
so whenever we have a stock deficit, what account is affected? So I'm going to write this now in the meantime. Trading inventory. Yes, you're on the money. Yes. Yes. 100%. Okay. So we said we have 44,700. But when we do a stock take, how much do we have? 42. Okay. Let me just write this down quickly and then we'll record that 400. You said the difference is how much? 2,300. Okay, cool. So crediting 2,300 over there, and then we said cost of sales is the other account that's affected. Okay, and that's for 2,300. Right, awesome stuff. We've dealt with that adjustment. Now we can move on to the next one. Stationery 600. Okay, what are they telling us? They're telling us again, this is after having done a stock take. So we've gone into the storeroom or storage and we've seen we still have 600 Rand worth of stationery. How does that affect our lives? What are we supposed to do with that information? We know that we have 600 worth of stationery. What are we supposed to do with that? What must happen?
So stationery needs to decrease because of the stock take.
Yes, you're actually on the money, yes.
I don't know what else would be affecting the stationery.
What did you want to say?
So you know what this one says, but now I'm not sure.
Yeah, it's fine. I take guesses. You guys know this. We work with guessing here. So you don't guess in the exam. Hmm? Yeah. You don't want you guessing there. We want you guessing here. Whilst there are no marks on the line. What did you want to say?
Wait.
So we do agree that trading inventory, stationery is decreasing. So what are we going to do to the stationery account? Debit or credit?
We're gonna credit it.
We're going to credit it, okay? Because remember it's an expense, so now we're decreasing that expense, so stationery. Okay, and how much is it in the pre-adjustment trial balance right now? It's 7,000, yes, sorry, 7,600. Okay, and then we're saying minus that 600, which is going to give us 7,000. Oh, sorry. Here we're just recording. My bad. We don't need to do this even here. So here we're saying 600 on the credit side. And what is this other account that we now need to debit?
Consumable stores on hand.
There we go. And that's why I was saying, say what you wanted to say. Because I heard the Funny enough, that was the exact same thing we said in the other class. Say it with your chest. On hand. Okay. Right. This is why often you hear people say, when you're in an exam and you're not so sure, just take your first guess. You're usually right. Okay. Right. But let's move on. Next one, consumable stores. 1,000. Yes.
Why?
Yes.
Wait, why are we debiting consumables? Oh, never mind. Deb mine.
What is consumable stores on hand, by the way? What type of account is it? Nope. On hand. On hand. Consumable stores. Is that? Do you agree? Do you think it's right? Hmm.
Yes.
You're both right. It is a current asset. Okay? All right. Cool. I don't know what you wanted to ask, but when you're ready, feel free to. So the last bullet point. Oh, okay, yeah.
Just with that 600, what do you do like with the 140 minus the balance from the. So you know, like this first one, yeah, we took the.
Yeah.
So
Can you see? Can you see with this first one, we were trying to establish what is the shortfall? What is the shortfall between what we have in our books and what we have in the stock take? Can you see that? So we didn't know what the difference was. So now only by deducting or taking the difference between the two do we get the difference. That's why we did that there. Now here they actually told us that we have stationery of 600 in storage.
But then why in this like balance sheet thing does the stationery say it's 7,600?
So what will then happen is that in your, can you see here we're only recording the difference because we know that in the general ledger and in your financial statements, this trading inventory will get reduced. Does that make sense? And it's the same thing with stationery when we credit it.
Okay, so I'm just asking why are we doing the whole difference thing with the stationery and we doing with the trading stuff?
Because we already know what the, with this,
okay.
yeah, you were together. I think I was also failing to explain it a different way. Okay, but you're good now.
No, I understand.
Anybody else? We're doing activity 4.4 in your textbooks. Everybody else is good. Okay. So here, consumable stores. Again, consumable stores. Do we have a consumable stores in our pre-adjustment trial balance? Let's just see. We do. It's 8,440. So that's decreasing. Okay, that's an expense. So again, they were debiting. All right, and so there's a difference between consumable stores and consumable stores on hand. Take note of that.
So,
Yeah, boo.
with the consumable, the consumables goes on hand.
Yeah,
The
boo.
stationery.
That 1,000. Yeah. Are we still fine? Okay. Whenever you are ready, then we'll. Okay. Right. So now we're moving on to the next one. The next adjustment. So we're on point 3 now. It says a debtor, Miss F. Tumeli, has been declared insolvent. Received a check for 6,000, constituting 30 cents in the rand from her insolvent estate. This transaction must be recorded. Okay, write the rest of her debt off as irrecoverable. Okay, so there's two things that need to transpire. One, we need to record actually having received the money that she's paid over to us, and then we also have to record or write off the bit that we are not going to receive as a result of her being insolvent. Okay, right. So how do we go about that? What must happen?
So do we not just first do the calculation?
Yeah, take me through it. What must happen?
6,000 times what you want over what you have, which is the 100% of the thing. And that gives you 20,000, which is like the total she owes us.
Okay. All right. So you are saying 6,000 times
100 over 30.
why 100 over 30?
Because we have the 30%, which is 30 cents to the rand. Because they're saying we received 6,000 rand, which was the 30 cents on the rand. So doesn't that then make the 6,000 the 30%?
Notice there, and this is why you practice accounting. They said receive a check for 6,000. So when they say for 6,000, that's the amount it's for, but constituting 30 cents in the rand from her insolvent estate. So in other words, this person was owing 6,000, but
How did we receive the whole 6,000?
no, we didn't receive the whole 6,000. It's constituting 30%. So remember, when you think about it, when they say 30 cents in the rand, remember 1 rand is made up of 100 cents. So basically they're saying 30% is what we receive. I know
they're
that
not saying that we received that check.
Yeah.
And that check is the constitution of the insolvency. And then I'm taking that as the
30%. I hear it.
So is that not what it is?
So let's check what they've done behind there in the answers. Let's see. Because I can see the logic as to why you're saying that as well. Let's see.
No, this is so.
So what? That's activity 4.4.
Use this.
Let's see how they do
Oh, right. Oh, right.
So, okay, yeah, so you are right. They said bank 6,000, so they're saying we've received 6,000. And then they are attributing this to the specific creditor, 6,000. There you can see we're crediting debtors control 6,000. So you're 100% right.
So is credit losses and bad debts, what's the difference?
No, credit losses and debtors is the same. It's just, whichever, it's the same account. It's the same account. Okay, so thank you for that.
Wait, can you
Explain.
repeat what you said?
So when they say that we received a check for 6,000 rand, and that constitutes 30 cents to the rand, they're basically saying we got 6,000 rand, and that's 30% of what they owe us. So then I took that 30% and I just did what we wanted. We have the 30%, which is the 6,000. We want
Oh, yes.
100%.
Oh, yes.
But what I would advise is that we deal with one double entry first before moving on to it. Because you're doing the calculation for obviously the bad debt or the credit loss. Okay. So I think the first thing that you want to do, because it's easier, is record the money that we have received. So bank, we know we're debiting this. Okay. And that's 6,000. Okay, and then obviously your debtors control. Okay, and here obviously you can put in the name of the actual debtor. I think here it was F. Okay, and then 6,000. All right. So now, yes. Yes. So sometimes they don't ask you to. Sometimes they'll ask you with narrations. And it's not like you have to put it exactly like that. You can say check received from debtor. Right? And then obviously the next amount written on from debtor or bad debts or credit losses. All that we need to see is, do you understand what just took place? That's all that we need to see, and then you'll get your marks there. So don't worry about the exact wording. Okay, right. So this is the part where we now record our bad debts, okay, or our credit losses. Okay, we know that bad debts / credit losses is an expense account. Okay, and then as you were saying, we just use proportion in order to calculate how much of this actually.
Just say, because remember how we calculated
The other.
I forgot the word for it,
Mm-hmm.
which we got 20,000. So you take that 20,000 minus it with the 6,000.
Yes, you would. You would. So here, you could do it one of two ways. You could say, you could calculate straight to say, I want to get the amount that is, that was written off, which is the 70%. So you could say, what we want is 70%. What we have, though, is 30%. And then say times the 6,000. Okay? This is a more direct method. Okay? And then you'll get the 14,000. You said you got 20,000 when you did the 130 over 30, and then you'll get your 14,000 this way. Okay? So that just saves you, a step or two. All right? And then you have your 14,000 over there. Cool. But if you do it the other way, it's also perfectly fine as long as you arrive at the correct answer. So if we're debiting bad debt or credit losses, we're crediting debtors control. Okay. And that's also for 14,000. Okay. Everybody happy so far? You can push on. Okay, cool. Just get rid of these useless columns. Oh. There we go. Okay. And let me just zoom out for a second. Okay. There we go. Okay, awesome. So then the next adjustment that needs to take place says adjust the allowance for credit losses to the amount of 5,200. Yup, that must happen.
So we first need to find the original.
Yes. And where do we find that? In the pre-adjustment trial balance, on the balance sheet section there, or the statement of financial position section. And you'll see that that amounts to 5,400, right? So if they're saying adjust this to 5,200, we have to decrease it by 200. Okay, so how does that affect our books? How do we record that? What are we debiting? What are we crediting? Are you sure? Is that your final answer?
You're gonna credit allowance for credit loss, and then you're gonna debit allowance for credit loss, and then credit allowance something adjustment cost. So I forgot how the proper phrasing goes.
So do you agree with that? She's basically. Okay, so You're 100% correct, okay? So we are going to debit allowance for credit losses. Remember, allowance for credit losses is the asset. And that's why you can see here, allowance for credit losses is in your balance sheet section, okay? And now I want to explain this and take our time here because they can give it to you either way. They could have said adjust it to 5,600, and obviously that means we're not doing the same thing we're doing right now. Okay? So allowance for credit losses is a negative asset. Okay. So in this case, our allowance for credit losses prior was 5,400. Okay. So here we're adjusting it downwards. We're reducing. So in other words, we're saying we actually think that our debtors will pay us more than how they've done in the past. So we're actually being optimistic. Does that make sense? So since we're adjusting this thing downwards, we're then saying, remember, allowance for credit losses is the negative asset. So we're reducing that negative asset. Now we know negative assets, when they increase, we're always crediting. So this time, we're now debiting, as she highlighted. So allowance for credit losses. Okay, again, that's the negative asset. Okay, I'm just going to put here NA for negative asset. Just when you guys go over the video, you remember. And we know that this is obviously for 200. Do I need to do the calculation or we're good there? Okay, right. So that's the 200. Okay. Then allowance for credit losses adjustment. That's now typically the expense. But in this case, it's actually an income for us. All right. So allowance for credit losses adjustment. Okay, 200 Rand. So, as I was saying, if they had said we need to adjust this for 5,600, we would have done it the other way around. Because can you see now, we are actually being pessimistic. We're saying we actually think that there will be less money that we're going to receive from our debtors. Does that make sense? All right, cool. Awesome. So let us proceed. Okay. We've got 6 more minutes left in this session. Okay. All right, so I want us just to knock out these ones that we can quickly just address. So let's start with, we'll deal with, because I see the next 5 is about provision, providing is for depreciation, and then the next one is the mortgage one. So let's just quickly do 8 and 9. I think we can also do 7. So it says the tenant moved into the building on 1 September 2003. The rent for March 2005 has been prepaid. September 2003. So let's quickly do this timeline stuff. Okay, so we're saying 1 September, that's 9/03. Okay, and we know that our financial year end is 28. 28 Feb when? What year? 2005. Okay, so what does this tell us? This tenant has been there the whole financial year. Okay, because our financial year starts when? 1 March 2004. Am I right?
So then on the financial statement, will the rental income just be showing the financial year? They'll only show us the amount of money that will that be.
That's what we want. That's what we want. But right now, they told us what? They told us the rent for March has been prepaid. So in other words, this person has gone on to pay for another month, that being March. And I think March is 31 days, if I'm not mistaken.
So we just take that amount and divide by 13.
Yes.
That's exactly what we do. Okay. That's exactly what we. So I was just drawing the timeline so we can all see exactly what's happening here. Okay, so yeah, this is, we only want to reflect 12 months, but this is obviously now reflecting an additional month. So it's currently at 13. So as was highlighted, let's get a move on it. We need to find out what was the monthly rent. And so what was the rent income? 10,000.
No, sorry. So the full amount is 107,200.
250. Okay, that's all that we've received in terms of rent income, right? Then we're saying divided by 13, what does that give us? 150. Why aren't you guys like this online? Why? Why? So then we're saying we need to then obviously remove that 1 month. Make sense? So what are we going to do? How are we going to adjust for it? Remember in the journal, we're actually just recording the adjustment. So we're only going to be playing around with that 8,200.
So it's income received in advance.
Yes. Income received in advance and what's the other one? Rent income. Yes. So what are we debiting? What are we crediting?
Aren't you debiting rent income? It's decreasing.
That's what you said, right?
Oh, sorry, I didn't.
Okay. So rent income we're debiting because we're reducing it. Rent income, and that was for 8,050. Thank you very much. And then income received in advance. Remember, we said this is a current liability. And can you see what we're doing with this liability? We're crediting it. Advance. Same amount, 8,250. Cool. Right. Then number 9, it says the amount of advertising includes an amount of 17,000 for an advertisement that will be broadcast over the radio during the period of 13 March to 21 April. Okay, so already this 17,000, we don't want it because can you see it's falling outside of our financial year? 13 March, right, 2005. Okay, so we quickly just say to ourselves, okay, oh, actually I did that there. We don't want it, yes, we don't want it in this financial year. Makes sense. Yeah, that's what makes it a prepaid expense. And then you can see we're crediting advertising there because we're reducing the 17,000. Sorry, I actually recorded this in the wrong place here. So it seems. Huh? Yeah, it is fine. Oh, yeah, it is actually in the right place. Okay, cool. Mm-hmm.
Just decrease the rent income.
Yes.
You're not good.
Remember rent income. That's money for.
Sorry.
Yeah. Okay. Awesome. Cool. So let's just quickly record this and I'll let you guys go on a break. The quarterly statement of the fixed deposit shows accrued interest of 200 Rand. The fixed deposit matures on 1 September 2005. So here they're actually telling us what is due to us. Because accrued, it's been owed. All right. So what must happen here? That last bit we can ignore. The fixed deposit matures on 1 September 2005. Doesn't make a difference to us because remember that's outside of our financial. Because remember, our financial year ends when? Let's go there. 28 Feb. And they're talking about September. Okay, so that last sentence we don't need to worry about, but we're interested in that first statement there. So what must happen with this accrued interest of 200 Rand? We're going to debit accrued income, yes, of 200 Rand.
And then we credit,
Yep, we credit what? Interest on fixed deposit. Because remember, the fixed deposit is actually the asset. And then this interest is the actual income. Interest on fixed deposit. And we know that's 200 Rand over there. Oops, sorry. And 200 Rand over there. Okay. Everybody happy so far? Okay, right. So if you have any questions, feel free to share them as soon as we get back from the break. Guys online, okay, if you have any questions, feel free to do the same. Okay, I'll see you guys in 10. Okay, so 3 past 11. Let's take off at 3